the second half of the Chapter 2 demonstration. And what we're going to do is we're going to take what we just learned in our accounting equation. This is what we did for the first part of the Chapter 2 demo. We put all of our transactions into the accounting equation, into the T accounts. And then what we're going to do is learn how to journalize them. So in accounting, we don't use this format. We learn debits and credits this way, but in our real world of accounting, what we do is we learn journalizing. And a journal looks like this. And the journal has a date column, a description column. We'll get to the post reference, and then it has a debit and credit column. So what we're going to do again is we're going to take the same transactions that we learned for the first half of Chapter 2, and then we're going to put those into journal entries. And this is the last time that we'll use Sylvia Workman as our example or our demonstration. So again, with this, we're going to take the same transactions that we did for the first half of Chapter 2, and we're going to put those into journal entries instead of T accounts. So I'll refer back to this as we go. As you are completing this chapter, it is good to have your helper sheet out so that you can refer to any of the T accounts to see if there's a transaction that you have questions on that you might need to refer back to as you're going to. So maybe you don't remember how to do one transaction with, paying for cash on account or something like that, then you can refer back to your T account helper sheet. All right, so again, what we're going to do is we're going to journalize transactions. And so we're going to take the journal. This is at the end of your demo packet that you have. And we're going to put the same transactions, again, that we learned from Chapter 2. And we're going to put those into our journal entries. Now with journal entries, we're going to use titles. We're not going to use actual, we're not going to use how do I want to say it? That we're going to use titles. We're not going to use words. So we'll use cash. We'll use accounts receivable, notes payable, and so on. We'll use the titles that we learned here. We're not going to, write invested cash or invested equipment, or we're not going to put paid cash, things like that. We're going to use actual titles like cash, notes receivable, accounts receivable, and so on. Okay, so the first part here, again, we're going to journalize the transactions into the journal, and we're going to use these same transactions. So on August 1st, Workman invested $3,000 cash and $15,000 of equipment into expressions. Now with this, we're going to start using dates. So in your date column right here, we're going to put August, and you can just abbreviate August with AUG and then put the date in the second column. And then what you're going to do next is we're going to look at the transaction. So we're going to invest cash and equipment into the company. So let's look at what we did for letter A before. We added to our cash on the debit side. We added to our store equipment on the debit side. And then our investment was a credit to capital. We added to capital on the credit side. So with this, we're going to do the same thing, but we're going to put it in journal form. So we want to always list our debits first, and that's one of the things that is kind of the picky part of journalizing. So we're going to start with cash, and then we have store equipment, and we can abbreviate in our journal entries, not on our financials, but our journal entries. And then we're going to indent, and we're going to put S, Workman, comma, capital. Now with this, we have our three titles, just like we did with our T accounts. We had our cash, we have our store equipment, and then we have our capital. So those are our three. Now you just want to kind of walk yourself through it and say, where are the transactions going to go? Well, we added to cash, and that goes on the debit side. So we're going to put in $3,000 debit, no dollar signs, no .00. Our equipment, we're going to add to equipment on the debit side, $15,000. And then the total will be our credit. Remember, debits have to equal credit still. And that's going to be our capital credit at $18,000. So our debits equal our credits. And we just put what we did. We debited cash, we debited store equipment, and we credited capital. So that's what we did here. Now, the second part that we want to put on here is an explanation so that somebody who's looking at our work can tell what this journal entry was for. So I'm going to put owner investment. So owner investment. So here's our first transaction. We use a date instead of a letter. And you can see already how this looks a lot less messier than the T accounts do. Okay, so that is our August 1st, letter A. We're going to cross that one off and we'll move on to the next one. Now with this one, we're going to pay cash for furniture for the shop. So this is August 2nd. Now you don't have to write August again. Go ahead and skip a line and put the 2nd, the date there in the date column. And then we're going to do the same thing we did before. We're going to pay cash for furniture. So we're going to add to our furniture on the debit side. And we're going to credit our cash, because we subtract from the cash, paid cash, on the credit side. So we'll put our furniture first, that's our debit. And then our cash is our credit. We indent the credit a little bit there. We're going to add to our furniture on the debit side, and that's going to be $600. And we're going to subtract from our cash on the credit side, $600, just like that. And then what we have here for our explanation is that we purchased furniture. Purchased furniture. Now with this, what we want to do is we could, if we knew what the check number was, we could put this in our explanation as well, but we don't know that, so we'll just leave it as is. So you just need a short description that explains the transaction to somebody who is looking back at the work that you did. I don't go word for word and grade these. You can just put your own explanation. All I really look for is an explanation that does explain the transaction. So again, short and sweet, but make sure that it does fit the transaction. All right, then our next one is on August 3rd. We paid $500 cash to rent space in the strip mall for August. And so with this one, again, we're going to pay out the cash and we're going to have our rent. So we're going to add to our rent on the debit side. And then we're going to subtract from our cash on the credit side. Again, try to get your debit in first. We always want to list that first. So I'm going to skip a line and put the 3rd. And I'm going to put rent, and then expense, and then cash, because I'm paying cash for rent. I'm going to add to my expense to keep track of those for the month, and that will be $500. And then I'm going to subtract from my cash on the credit side, $500. Again, no dollar signs, no .00s. So for this transaction, our explanation is just going to be paid, and I'll just put PD for paid, rent for, I'm just going to put AUG for August. So again, short and sweet. If I knew the check number, I could put that as well. So paid cash for rent. Okay, next one that we have here, and again, cross them off as you go in case you get interrupted or you have to go to work or anything like that. We purchased $1,200 of equipment on credit using a long-term note payable. This is the 4th. We'll go ahead and put the 4th in our date column. You can skip lines in between so that they kind of separate themselves out. And remember, this one did not say cash. It said that we purchased $1,200 of equipment on credit. All right, so for this one, we bought more furniture, more store equipment, so we're going to add to our store equipment $1,200, and then now we owe money. We we borrowed the money from our financial institution on a long-term note payable. So we're going to put this in our note payable on the credit side because that adds to the balance that we now owe for that note payable. So we're going to put our store equipment first. So again, you can abbreviate equipment and then note payable. We're going to add to our store equipment, and that's going to be $1,200. And then we're going to add to the note payable on the credit side, $1,200. Again, making sure your debits still equal your credits, okay? And then for our explanation, again for this one, we're going to put purchased and then equip for store on note, or something close to that. So purchased equipment for store on note. Okay, for the next transaction, this is where we're opening up for business here, and we received cash from services provided in the first week and a half of business, ended August 15th. So even though we opened on August 5th, we're just going to journalize all of our cash that we received from the services on August 15th. So we'll use that as our date. So go ahead and skip a line and put the 15th. And again, just like we did in our T account, and you're more than welcome to draw yourself out the T accounts first, so you got to get that picture in your mind first before you journalize it. You can always do that. So here's what it looked like here. So we received cash, that's our $825. We add to our cash on the debit side, and then that was for services provided, which is our revenue, and that's going to be our credit of $825. So we're going to go ahead and put our cash first, and then we're going to put our hair cutting service. We're going to add to the cash $825 debit side, add to our revenue credit side $825. Remember, with your revenue account, just like with your expenses, we can't be on that other side. So you have to have revenue as a credit, you have to have expenses as a debit. So remember that as you do journalize your transactions. Get out the helper sheet, that's what it's there for. Alright, for our explanation for this one, we're going to put cash received for services. So cash received for services. And again, our debits equal our credits, listing the debit first. Okay, our next transaction is going to be on August 15th as well. We provided a $100 service on account for a customer who, again, couldn't pay right away, so they're going to pay for it later. Now, again, we provided the service, but no cash is exchanged hands, so we're not going to list cash at all. If we look back at our T account work, we're going to add to revenue because we did provide the service, that's our credit, but then we're going to use our accounts receivable as our debit because we didn't get the cash. We're going to go ahead and add it to accounts receivable. That's for our customers who we allow to provide the service and then they pay for that later. So again, on the 15th, we'll put the date. You can abbreviate accounts receivable on the journalizing, A/R, and if you email me, I will use A/R. And then we have our hair cutting service. And this is going to debit or add to accounts receivable $100, and then add to our revenue account on the credit side $100. Explanation for this one is provide service on account. So I'm going to put provide service on, I'm going to abbreviate account with ACCT. So provide service on account. Add to the accounts receivable, add to the revenue, debit accounts receivable, credit the revenue. Okay, then that person paid us, so we received a $100 check for the services previously rendered on account. So now we're going to actually get the money. So let's go ahead and put the 17th. That's going to be our date. And we're going to actually get the money this time. So we're going to add to our cash on the debit side. And then we're going to subtract from accounts receivable on the credit side. Now again, we don't want to add to the debit side because that's going to make it look like the person owes us 200 instead of 0. So we want to put that on the credit side. So we're going to list cash first, and then accounts receivable. We'll add to the cash on the debit side 100, and then subtract from accounts receivable on the credit side 100. And our explanation for this one is received cash from service provided. And we could put the date there if we needed to be able to refer back to that. So I could put 8/15. I could put that as well. So again, we added to the cash and we subtracted from the accounts receivable. Okay, now the next transaction that we have was also on August 17th, and we paid cash to the assistant for working during the grand opening. So we're going to list the 17th as our date. And again, with looking at our T accounts, and again, feel free to draw these out first for yourself before you actually put them into the journal entry. So for this one, again, we're going to pay cash to our assistant. So this is going to fall under wages expense. Remember, our our expenses can only go on the debit side, so we can't have anything on the credit side of our expenses. And then we're going to subtract from the cash because we're going to pay that out. And if you know what one side is, remember the other side has to be the opposite. So if you're very comfortable, I paid cash, that's my credit. The other half has to be a debit, and that's going to be wages expense. So we're going to list our debit first, wages expense, and then our credit to cash. So we will add to our expense to keep track of all of our wages that we paid, $125, and then we're going to subtract from our cash, $125. Now with this explanation, we're going to put paid employee wages. So PD for paid, and then employee wages. Okay, next transaction that we have is going to again look like the one that we had on the 15th, but this is for the second half of August. There's 31 days in August, so we'll go ahead and record this as of August 31st. So we will add to our cash and add to our revenue, just like we did on the 15th up here. So for the 31st, we will add to our cash, and we'll add to our hair cutting services. We're going to add to the cash on the debit side $930, and then we will add to our revenue account on the credit side $930. And same explanation, received cash or cash received from services, or you can put received cash from services. So cash received for services. All right, now one of the things that you're going to want to remember as you are journalizing is that you never want to split up a transaction between pages, because you can kind of see we've only got 4 lines left here from our journal page. So I will go ahead and put the next transaction on here, but you never want to split them up. Like for this one, you wouldn't want to put cash on this page and then put hair cutting services on the second page. You always want to keep your transaction together. So if you don't have enough room, you'll want to start a second page of journal entries. All right, so this one is we're going to pay $400 towards that note payable that we entered into onto August 4th when we bought the equipment. So we're going to go ahead and pay for that, or pay part of it. So we're going to pay cash. That's going to be our credit. We'll subtract from the cash, and then we're going to subtract from our note payable on the debit side. So again, we'll subtract the note payable debit, and we'll subtract from our cash on the credit side. So 31st for your date, we're going to put our note payable first, and then our cash is next. We will debit the note payable $400 because we're paying part of what we owe, and then we'll credit the cash $400. Now our explanation for this one is that we're gonna go ahead and we're going to pay. So I'll put pay installment on note, or you could put paid payment on note, whichever you want to do with that. Now, this was page 1 of our journals, and you'll want to go back up to the top. I forgot to do this in the beginning, but you're going to want to put page 1 up here at the very top of your journal. Now, some of your journals in your homework will not have a page number spot, but you're always going to want to put that up at the top of your journal because it's going to come into play in just a minute here when we get to the next part. Okay, then you also have in your packet another journal page. So if you'll go ahead and find that second journal page, and we'll label this page 2. And our last transaction that we do have here is that our owner made a $900 cash withdrawal for personal use. And again, this is a totally legitimate transaction for a company that they can start taking their initial investment back out. So with that one, we went ahead and we wrote them a check. So we're going to subtract from our cash, and then we're going to keep track of that $900 in our drawing account. So we will subtract from the cash. There's our $900 credit, and then we're going to keep track of the withdrawal on the debit side of our withdrawal T account, or as we put it in the journal. So with this one, again, we're going to start our new page. We'll put AUG. You always want to put that at the top of each new journal page. You don't have to put it for each transaction as we go. Put the date of the 31st. We're going to put S, Workman, and we'll just go ahead and put comma drawing. You can put withdrawal or drawing, and then cash. Now, again, with this, we want to always put the name of the owner with our capital and our drawing, because eventually you may have a partner, and so then you need to keep track of their investment and their drawing, so you have to put the owner's name. So we always want to put that. We're going to add to the drawing so we can keep track of those transactions. So we're going to put a $900 debit, and then we subtract from the cash on the credit side, $900. Now, again, if you're not very comfortable with this transaction, you know cash is going to be your subtraction. That's your credit. You're comfortable with that part. The other half has to be your debit. So there's your drawing as well. Now, with this transaction, we're going to go ahead and put paid cash to owner. So I'll just put PD, cash to owner. And that's how we journalize the transactions. So that's our page 2 of that. All right, so we journalized all of our transactions that we have here. Again, remember to cross them off as you go. I know it's a little bit harder on your ebooks once you get going with the homework. So maybe you'll want to print out, the instructions part or the transactions part and be able to cross those off as you go. Or I know some students will highlight. If you can do that, they'll highlight those in their ebook as well, if you can figure out how to do that too. So make sure you don't do the same transaction twice, because it'll throw you off when we go to balance out. All right, so we have all of our transactions journalized. So we went ahead and we did that. Now what we're going to do is we're going to go ahead and we're going to start what we call posting. So you have a couple pages of these general ledgers, and I'm going to tear mine apart because it makes it a little easier for going through and doing the posting. Now with the posting, what we're going to do is we're going to take all of our transactions that we just journalized here, and we're going to take the amounts and we're going to put them into individual ledgers. And so that will keep track of our money as of any one date. So as we go through, we're going to open these up, and then we're going to post to them. Now, one of the things that your textbook has for chapter 2 is it talks about chart of accounts. And there's not going to be very many times when you will have to build a chart of accounts, but I just kind of want to show you what it looks like and talk about it for just a minute here. So this is in the ebook or the textbook, and you can see here this is a chart of accounts. Now we put our ledgers into order by grouping of what they belong to. So assets are things that we own, we're going to group those together. Liabilities, things that we owe, we'll group those together. Capital will group together, revenues will group together, and expenses will group together as well. So with your assets, usually you start with cash. That's usually a 101 account. You'll have an accounts receivable, possibly, equipment like we did, furniture, that kind of stuff. So you'll sit down with your accountant and you'll build this chart of accounts. So you'll say, well, what assets do you think we will use for our company? Then when we get to the liabilities, those are a 200 number, and we will have accounts payable, notes payable, and then we're going to get into unearned revenue as well. Those are all liabilities, and again, you'll sit with your accountant and figure out what liabilities that you're going to need ledgers for. Then you're going to have one for capital and one for withdrawals, so those are going to be those two at this point. You'll need a revenue, that's a 400 number. And then expenses, you'll sit down and say, okay, well, what kind of expenses do you think you're going to need? Well, advertising, rent, utilities, salaries or wages, postage possibly, things like that. So you'll sit and figure those out. We can add ledgers as we go, and what we will do is we will put those in the list. Most of the time we will add to assets, liabilities, and expenses. We don't usually do too much extra with the revenue or the capital or withdrawal unless we add partners to our company. So again, like I said, you won't have to really build a chart of accounts as you're going through chapter 2 or from now on when we post, but you will have these, and I just want you to kind of see where this all comes from. Okay, so I already sat down with Sylvia Workman. We'll just say, for example, that you are the accountant, I am the accountant, and we sat down with her, and she knew she needed specific ledgers. So she's going to need a cash ledger, so we're going to label the first one cash, and we're going to give this one account number 101. Now, you're going to have a lot of cash postings. As you can see, we used cash a lot, and I did not change my demo. So what we need to do is scribble out this middle part here, and we'll just make this one big ledger for posting to cash. Our next ledger that we have down here next is going to be for accounts receivable. So we want to spell that out because these are part of the permanent records or documents for a company. So we'll put accounts receivable next, and that's going to be account number 102. Okay, then our third ledger on this page, remember we're skipping that second one to help with cash. This is going to be furniture. And this is going to be account number 161. All right, so that's our first three: cash, accounts receivable, and furniture. Then if you flip over the top of the next page, top ledger, this is going to be store equipment. And we're going to give this account number 165. Next is our note payable. And we're going to give this account number 240. Right below this is going to be our capital, so we're going to put S, Workman, comma, capital. And that's going to be account number 301. And then we're going to have our drawing account, so we'll put S, Workman, comma, withdrawals, or drawing, either one is fine. And we're going to label this one 302. So again, page 2 ledger should have store equipment, note payable, capital, and withdrawals. Okay, then we have one more page here that we're going to use, And this one's going to be starting with our revenue. So we're going to put hair, cutting, service, revenue. And we're going to give this account number 403. And then each one of our expenses are going to have their own ledger. So we'll start with our wages expense. And remember to spell out expense here because this is a permanent document. And this is account number 623. And then the second one is going to be our rent expense. And this is going to be account number 640. So third page we have revenue, and then our two expenses, wages and rent. Okay, so we got that part done. Now comes the really fun part. And this is where, again, we're going to take each of our transactions and we're going to put them into our ledgers. Now, I'm going to be honest with all of you, and posting is a love-hate relationship. You're either going to love this or you're going to hate it. And we do have to learn how to do it because we use it for quite a few chapters as we go through our book. And so we do need to know how to do it so that it does go through the process of the posting. Now what we want to do is we don't want to post all of our cash, and then we don't want to post then all of our revenue and so on. We want to go line by line by line. So we'll start with the cash and post that. We'll start with the equipment and post the $15,000 debit. Then we'll post the capital credit. It's going to be a lot of flipping of your papers, and I'll go slow so that you can catch up as we go. Now, with our ledgers, you have a date column, an item column, post reference, you have debit and credit column, and then a balance debit and credit column. Now, what we're going to do is we're going to label these just like we did our T accounts, so that you can get familiar with making sure what side or the normal balance side should be for those assets. Like cash, we don't want to be negative cash, so we always want the balance to be on the plus side or the debit side. So with cash, we're going to add on debit, subtract on credit, and keep our balance on the debit side. So we're going to put a plus above debit, a minus on credit, and a plus above the debit. Okay, so that's where we're starting, is with our cash, and we're going to post a $3,000 debit. So I'm going to put my date off my journal, August 1st. Nothing goes in the item column. In the first debit column, we're going to put $3,000, and that is going to bring our balance over to our debit plus side. Because we had 0 before, we add 3,000, so our new balance is 3,000. Now, whatever page of your journal this posting came from, this is page 1. We want to put that in our post reference column, and then we're going to put this account number 101 next to cash in the post reference. So we can refer back. This $3,000 got posted to ledger number 101, and then we can look here and say this posting came from page 1 of the journal. And then we can see that as well. Okay, our next posting, we're going to go to store equipment and post a debit of $15,000. We're going to put August 1st in our date column. For our store equipment, we're going to add on debit and keep our balance on the debit side. Remember, I'm sure you can see that we haven't subtracted anything from the store equipment. We're going to post a $15,000 debit, and that's our new balance as well. This came from page 1, so we're going to put P, or just a 1 for our post reference, and then 165 goes right next to store equipment. 165. Okay, capital is next, and that's a credit for $18,000. Same page as equipment, just down a little bit further. Put AUG 1 for August 1st. Capital, remember, we can only add on credit, keep our balance on the credit side. We're going to put in an $18,000 credit and bring that over to our balance for $18,000. Post reference is 1, and then we're going to put account number 301 next to capital on our journal. So we have the first 3 done. And again, we're going line by line. You're going to go journal ledger, journal ledger, journal ledger. All right, we're going to furniture next. So we'll go to the page that has cash on it, go to the bottom for furniture. This is August 2nd, so we'll go ahead and put August in our 2. For furniture, we add on debit and keep our balance on the debit side. We're going to post a $600 debit, and that's going to be our balance as well. Post reference is 1, and then we're going to put account number 161 next to furniture. Okay, cash, we're going to post a $600 credit. Now, you don't have to write August again. Just put the 2nd in your date column. Remember, nothing goes in the item column. We're going to put in the minus side or credit side, 600. We had 3,000. We just spent 600. So now we have $2,400 left. No dollar signs, no .00s. Post reference is 1. And then we're going to put account number 101 next to our cash. Next one is rent expense. So we'll go to our page that has our rent expense. This is going to be in our date column, August 3rd. For our expenses, we add on debit, keep our balance on the debit side, just like we did on our T account. Keep that balance on the debit side. And then we're going to post, again, a $500 debit. So we'll put that in the first column and then bring our balance over, 500. Post reference is 1 and account number 640 for our rent expense. Okay, next one is cash. We're going to post a $600 cash credit. I'm sorry, not 600, 500. So 500, we're going to put the date of the 3rd and a $500 credit. Now again, we're going to take our balance of $2,400, subtract 500. We get $1,900. Use your calculators. That's why you need a calculator for the class, so make sure you use your calculators. Post reference is 1 and account number 101 for the cash. Alright, next one we're going to go to store equipment and we're going to post a $1,200 debit. We already wrote August, so we don't have to write that again. This is the 4th. And this is going to be a $1,200 debit. We already had $15,000 in store equipment. We're adding another $1,200, so we're at $16,200. Post reference is 1 and account number 165 next to store equipment. Now, note payable is next. This is going to be a $1,200 credit. We do need to write in August and then the 4th. Remember, for our note, we subtract on debit, add on credit, keep our balance on the credit side, just like we did on our T account here. Subtract on debit, add on credit. And then what we're going to do here is we're going to post a $1,200 credit. And that's our new balance on the credit side. Post reference is 1. And then we're going to put account number 240 next to note payable. Alright, we're going back to cash. This time we're going to add the cash on the debit side. So this is the 15th. We're going to put $825 into our cash debit column. 1,900 plus 825 is going to give us 2725. So that was 1,900 plus 825 gives us 2725. Post reference is 1 and account number 101 next to cash. Okay, revenue account. We're going to go to the revenue account and we're going to post an 825 credit. Again, this is August 15th. Remember, with revenue, we're going to add on credit, keep our balance on the credit side, just like we have on our T account helper sheet. So revenue, we add on credit only, can't put anything on that debit side. And we will put 825 credit and bring that to our balance. Post reference is 1 and account number 403 next to our revenue account, hair cutting service. Okay, next transaction, we're going to go to accounts receivable and post a $100 debit. So we're going to accounts receivable. This is August 15th. Remember with accounts receivable that we add on debit, subtract on credit, keep our balance on the debit side, just like our other asset cash. Now, again, with this one, we're going to add 100 on the debit side. That's our new balance for accounts receivable. Post reference is 1, and then account number 102 next to accounts receivable. I know you're tempted to go down and post this other accounts receivable, but again, just go line by line by line. Okay, next one is a $100 revenue credit. So we're going to go back to revenue. This is on the 15th. And we're going to put in a $100 credit. We already had $825 in revenue. We're adding another 100 to it, so we're at $925 for revenue. Post reference is 1, and then account number 403. All right, we're about halfway done, so we've got a little bit more to go here. Okay, we're going to go to cash, and we're going to post a $100 debit. So we go back to our ledger for cash. This is on the 17th. We're going to add 100 on our debit side. Again, this is from our posting here. We had $27.25. We're adding 100. We're at $28.25. Post reference is 1. And then account number 101 goes next to cash. Okay, going back to accounts receivable, we're going to post a $100 credit. So August 15th or 17th, we'll just put the date of the 17th. This goes in our credit column. Now, they owed 100, they paid 100, so the balance is 0. You can do one of two things here. You can put a 0 in the normal balance side, or you can just put a line through that normal balance side to show that it's at 0. Either way is fine. Post reference is 1, and then account number 102 goes next to accounts receivable. Okay, wages expense, a $125 debit. So just like with the rent, we're going to add on debit, keep our balance on the debit side. This transaction is on the 17th, so we'll go ahead and put AUG and the 17th. We're going to put $125 on the debit side, bring that over to our debit balance. Post reference is 1, and then account number 623 next to wages expense. Cash, a credit for $125. So we'll go back to our cash ledger. And again, this is on the 17th. We're going to have a credit this time of $125. Our balance was $28.25. We subtract $125. We're at $2,700. Post reference is 1. And then account number 101 next to cash. Okay, next one again is cash. We're going to add on the debit side. So this is going to be the 31st. So we'll just go ahead and bring that down to here. We're going to add a debit of $930. So we take our $2,700 plus $930. We get $3,630 on the debit side. $3,630. Post reference is 1. And then account number 101 next to cash. Okay, hair cutting services, again, the revenue account, we're going back to that. This is going to be the 31st. Credit of $930 right from the journal. $925 plus $930, we get $1,855. That's what our revenue is so far for the month. If you don't like that, pretend it's in millions. Post reference is 1, and account number 403 next to revenue. All right, we got 2 more to go. 4 more postings, 2 more transactions. Note payable, we're going to post a debit of $400. Now, with your note payable, put in your date of the 31st. This is a debit of $400. We owed $1,200, we're paying $400, so our new balance is an $800 credit. You don't want to put that added to the $1,200, then it would look like we owe $1,600, so you want to subtract that out. Think of your car payment. You make a car payment, you want that subtracted from your balance. Post reference is 1, and then account number 240 next to the note payable. Okay, cash. We're going back to the cash ledger, a $400 credit. 31st, $400 credit. So we take what we had in cash, $36.30, subtract the $400. We're at $32.30, $3,230. Post reference is 1, and then account number 101 on the cash. So that's page 1. We're all done with page 1. And then we're going to move on to page 2. We have 2 more postings. So we want to go to our withdrawal or drawing account and post a $900 debit. So with the drawing account here, we're going to put August 31st. With the withdrawals, remember we're only keeping track of those on the debit side with a debit balance. So that refers to your helper sheet. We can only be on the debit side here, so we want to only have debits in the column here. We're going to post a $900 debit, put that in the balance. Post reference is 1, and then account number 302 next to our drawing. All right, last posting to cash, and this is going to be a $900 credit. 31st for the date, $900 on the credit. We had $32.30. We're going to subtract $900, so we'll put that in our calculators, and we have 2,330, $2,330. Post reference is 2, and I made a mistake on the note or on the withdrawal account. I better go back and fix that. This is post reference 2. Okay, then for cash, it's page 2, and then we're going to put account number 101 next to the post reference. So that is all our posting. So what did we get from all of our posting? Well, now we know that our cash is $2,330, accounts receivable 0, furniture is $600, store equipment $16,200. We owe $800 on the note. We have an investment of $18,000, withdrawals of $900, revenue $1,855 for the month, $125 we spent in wages, and $500 in rent. So those are our ending balances for all of our ledgers after we have posted. Then after you have posted, what we want to do is we want to go ahead and we want to prepare a trial balance. So if you flip over your ledger for rent, this is on the back side, and there'll be a trial balance right here. This is a formal document as well, and what we want to do here again is just go through our ledgers and make sure that our debits equal our credits. First thing we do with our trial balance here is that we're going to go ahead and write the name of our company, and this is for the last time you'll write this out, is Expressions. And this is just a specific date of August 31st. And we'll go ahead and use the current year, 2022. All right, we'll start with the ledgers. Okay, so we're just going to label all of our ledgers over here on the left. We have cash. We have accounts receivable. Now, again, just like we did before, any accounts that are 0, you can leave those off the trial balance, but I'm going to put it on here just so that you know that if it is a balance on there, there should be something here, but I'm just going to include it even though it's at 0. Then we had furniture, store equipment, and again, remember you're spelling everything out, no abbreviating. Note payable, S, workman, comma capital, S, workman, comma, drawing. Then we had our hair cutting service revenue. We had wages expense spelled out and rent expense. I think I mixed those up, but that's okay. Yep, I did. No, I didn't. That was right. Okay. And then underneath rent expense, we're going to write totals. Okay, so again, what we're going to do here is we're going to take the very ending balance from each one of our ledgers and put it either on the debit or credit side, depending on what it is here. So our cash, we end up with a debit of $2,330. We'll put that in our trial balance, $2,330. Accounts receivable ended up being 0, so I'll just put 0 on the debit side. Furniture was a debit for $600, debit side. Store equipment, debit $16,200, so that goes on the debit side. Okay, then we had our note payable, $800 credit. Capital, $18,000 credit. Drawing, $900 debit, back on the debit side. Then our revenue, that's $1,855 credit, back over on the credit side. And then our wages were $125 debit and rent was a $500 debit. So again, wages $125 debit and $500 rent expense debit. All right, we're going to draw a line under our two columns. Draw a line under our two columns there. And then we're going to add up our debit side, add up our credit side, and make sure that each of those two balance out. So our debit side, we add up, it's $20,655. And our credit side is $20,655. Now, for most of your problems, you'll have check figures as to what your trial balance should be. So when those two equal out and equal the trial or the check figure, you can double rule that. If this doesn't equal out, you're going to send me a picture of this, and then I'm going to say, okay, well, you got your revenue on the wrong side, or you got the store equipment balance incorrect. And I might say, send me your store equipment ledger, or I might say, send me your cash ledger, depending on which one is incorrect. So it's really easy to do once you send me this, and then I can go ahead and help you fix it. But again, please email, because if it's wrong, then your financials are going to be wrong as well. Now, for the financials, you're going to take your trial balance numbers here. You'll take these numbers here and you will prepare your financials. So this is what your income statement looks like. So again, we take our trial balance numbers, and our revenue is $1,855, and then we have our rent and our wages $625. Net income is $1,230. That's what our income statement will look like. Then what we're going to do for the statement of owner's equity, again, 0 for beginning capital. Here's our investment of $18,000. We add in the profit, subtract the withdrawals, we get $18,330 for our ending capital. And then for our balance sheet, assets, liabilities, and equity, we list our assets. We total those up, we get $19,130. We put in our liability and note payable and our equity from our statement of owner's equity, and we get $19,130. We double rule each spot because our assets equal our liabilities and equity. So that's what you would do if you were to build your financials off of that trial balance. Okay, the last thing we have to do is our ratio, and this is our called what we call our debt ratio, and you do have a spot in your demo here for our debt ratio here. All right, so for the debt ratio, what we're going to look at here is is what most of our companies are going to set as something that they want to hit as a ratio. So for the debt ratio, what you're going to do is you're going to take your couple of your numbers, and these are going to come off your balance sheet. So we get these numbers off of our balance sheet. In your textbook, this is in your textbook, and it's on page 61. And this is assessing our company's risk of failing to pay our debt. And so we're looking at, basically our debt ratio. Can we pay our debt, or how good are we at paying our debt? So we're going to look at our total liabilities and our total assets. So we get these off of our balance sheet. Here's our total asset number, and then here's our total liability number. So we would pull these off of our balance sheet. So our ratio is total liabilities divided by our total assets. Total liabilities, again, for this company off of our balance sheet is $800. And our total assets off of our balance sheet is $19,130. You're going to put this into your calculator, and we get 4.18%. Now, with that, you want to bring it out a couple decimal places, because if we are comparing ourselves to our competition, then we want to get that as close as we possibly can. So this is 4.18%, or you could put it in a decimal at 0.0418, but it's almost better because we're looking at that ability to pay our debt. So that's our ratio for Chapter 2. You had one for Chapter 1. That was our ROA, or return on assets. This is our debt ratio. Now, what companies do is they will set this. They will set a number up in their budgeting part of the year, and they will look at that and see if they're close to it or not close to it for what they want to project for the year. So that is the end of our Chapter 2 demo. And then what you're going to do is go and work on your homework for Chapter 2. And again, that is listed in your schedule, and it's also listed in the schedule on Canvas as well. So what you're going to do for homework here for the second half is you have a quick study here, a couple exercises, and then you have some problems. On 2-6A, just do part 1, please. You are going to start the serial problem 2. And for serial problem 2, I will show you that part of it so that you can get an idea. This is going to be something that we will be using throughout our semester, is serial problems, and they are for the same business called Business Solutions, and I will get this up here for you on the overhead so you can see it. It's on page 80 in the textbook. I'm not sure. For the ebook, you're going to go down on the left side of your ebook, and you'll go underneath the quick studies, the exercises, and the problems, and then it'll show serial problem. Now, once you open up the serial problem, whether it's on page 80 in your book or in the ebook, this is Santana Ray, sorry, and she has a computer service company called Business Solutions. They provide consulting services and computer system installations, as well as custom program development. This is their chart of accounts here. And what you're going to do, and there's the papers for this in your Chapter 2 work in Canvas. You will print those out so you can get started on it. And you're going to go through and journalize the transactions for October and November. And then there's also, just a second here, I should have got the other page out. And then you're also going to have a couple more transactions at the top of page 81, or on the ebook it just continues on. So you're going to journalize these transactions into your journals. Okay, now again, if you need to draw out the T accounts, feel free to do that. Now with this, you're going to, again, journalize the transactions into the journal, and then you're going to post all of these. So you'll, the ledger's already open for you. So what you'll do after you journalize is that you'll post the entries, and then you're going to prepare a trial balance. So with the Chapter 2 serial problem, there are a couple transactions that you can skip past because they're just informational only. The first one is October 10th. This is just informational that the company hired Addie Lynn as a part-time assistant. You can skip that. It's just informational. November 13th. This one is the company agreed to perform future services for Alex's engineering company. No work has yet been performed, so that's just informational. You don't have a transaction for it. And then on the 25th, the company sent another bill to IFM company for a past due amount of $3,000. Again, just informational. So you will not have transactions for October 10, November 13th, or the 25th. Again, what you will do is you will journalize all of these transactions, and then you're going to go ahead and prepare the trial balance. So once you print out the serial problem from Canvas, you'll see that it says serial problem 2. It gives you, several pages of journal entries, so you don't necessarily have to rush through and not skip lines. You can skip lines. And then all of your ledgers are all set here for you. I would go through and put the pluses and minuses on them, just like we did with our demo. And then when you're finished, you're going to prepare the trial balance. Now, with this trial balance, if it doesn't balance out, you'll send me a picture of it. I'll try and figure out what happened, and I might ask again for some ledgers. Or if I can't figure it out from there, I might ask you to send me your journal pages as well. So from the schedule, again, you're going to complete that serial problem, and you'll have to look at your calendar for your due date for that. But again, you'll start that. It won't be due for a little bit of time, but once you feel comfortable with Chapter 2, then you can start journalizing those transactions for the serial problem. But again, just work on your quick studies, the 2 exercises, and then the 3 problems. Again, check the assignments area to see which which homework papers I collect. Check the other ones for clarity and making sure that you are posting correctly. A couple of the problems are a little bit longer because they do have a little bit more posting to them. But again, please make sure with your posting that you are going from the journal to the ledger back and forth, that you aren't just doing all of the cash at once, all the capital at once, all the rent at once, and things like that. All right, so go ahead and get started on your homework for Chapter 2.